you've kind of invested in fee-based business lines, many of them. They've been consistent, but now what the market seems to be seeing is that flowing through to the bottom line as well. Would you just explain how that went in the quarter?
Sure. We've made a conscious effort to diversify our business into these capital light, less credit risk fee revenue streams, one of which is our loan platform business, where people pay us to use our originations platform, which includes our underwriting capabilities, our marketing capabilities, and our servicing capabilities to produce loans for them for a fee that they pay us. We also generate fees in our SoFi Money account business through interchange, as well as our brokerage business, and then, of course, our credit card businesses. And so as we've diversified the products that we offer, the revenue streams have also diversified, where about 44% of our revenue now comes from these fees that are generated without use of capital and without credit risk. And so that de-risks the balance sheet quite a bit. So our ability to grow the overall business 44% with a 29% operating margin is reflective of that diversification and less risky revenue that's more visible as well.
Anthony, you just talked about de-risking. Elsewhere in the earnings domain, PayPal was asked about the strength of the US consumer, and comments from that company were somewhat negative, that they see some sort of cracks in the strength of the consumer. From those that use your platform and your various financial offerings, what are you seeing present day?
Yeah, they have a very different strategy and business than us, and a very different target audience. We're appealing to the overachievers in the United States that are looking for ways to be able to save, to achieve, and invest to achieve their long-term ambitions, whatever their American dream may be. So we're helping them spend less than they make and invest the rest. And we're seeing really strong trends for them. We see them lowering their cost of debt by refinancing out of expensive credit card debt that charges 24 to 30% interest into our loans that only charge 12 to 13% interest. We see them moving their money into SoFi Money. We give 3.8% interest on our savings account in SoFi Money if you're a direct deposit customer or a SoFi Plus customer. We offer them investment opportunities that are really attractive. We offer stocks without commissions, fractional shares. We have SoFi ETFs that are award-winning, as well as robo accounts. But we also offer IPOs. In addition to that, private equity, so you can invest in private credit, private real estate, venture capital funds, as well as long-short public hedge funds, and then finally private growth equity capabilities. And so a much more diverse business. Our consumer is very strong. Credit's performing very well, continues to improve. Spending through SoFi Money is also very strong. So we're seeing a consumer that's really trying to lower their costs and spend less than they make and invest the rest, and the flywheel's really working.
Anthony, it's interesting that flywheel comes at the same time as basically the market's got a flywheel of its own, and we're seeing froth in certain sectors. Retail investors really wanted to get in on the latest meme stock, as well as IPO. How are you thinking about generative AI, like helping with the education side of things? I know you're targeting overachievers, but are they diversified enough in their own investments?
Sure, and let me take your question and talk about what I think are two technology super cycles that are unprecedented. We're driving the growth that we are over the last 8 years without the benefit of crypto or blockchain or AI. But I think the combination of blockchain and crypto, as well as AI, are two super cycles that will put a tailwind behind our company and really help us really revolutionize the financial services industry in ways that continue to give people faster ways to send money at lower costs and to do it safer. In addition to being able to invest in this asset class, which does help as it relates to the areas outside the country that may not have exposure to the US dollar and its stability. In addition to being able to invest in that asset, will allow people to borrow against that asset, which will lower their cost of funding. In addition to that, will allow them to be able to pay across borders more easily and quicker. Artificial intelligence is helping us today across our entire business. We're using it in the back office to resolve disputes faster, to file suspicious activity reports, to solve account takeover issues faster. On the consumer side, we're offering something called Cash Coach, which is the ability to look at your cash across all your accounts. So it's really, that's not impacting our results yet. It's on the come, but they're both really exciting super cycles to see the benefits from.